Hey everyone, Dan here. Today we're going to look at 3 stocks and I'll talk about my actual trading plans for those stocks. 2 of them we've talked about in my previous stock plans update, and the third one is new. In any case, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And let's jump right into it. So the first one is Mara, which if you've been following this channel or following my Twitter, I have a lot of love for Mara, mostly because, there's these big swings. There's a lot of gaps that appear. There's a lot of gaps that get filled. It has huge pushes and then huge sell-offs. So it's really good for a couple of things as far as like how I trade it. One, the volatility is excellent for options trading, both on the calls and the put side. So being able to leverage options when a stock is as volatile as this, if you understand how to trade them and you understand the risk and you know how to mitigate that risk, it can be very, very rewarding. On the other side, dip buying shares in order to build a position and grow it over time is also something that I engage with Mara. So it offers a lot of dips. You kind of have to take 2 different headspaces on those 2 different types of trading. So on the options side, I have to be very sensitive to any big run-ups and any big sell-offs, and sort of prepare myself when one of those things happens that the opposite is most likely going to happen, just given Mara's history of this kind of a thing. And then on the longer term, on the shares side of things, I have to basically ignore these wild up and down swings, and more so just take advantage of those wild dips that it takes to add when my position turns red. And then once I essentially have like a position that's large enough that I'm happy with it, and things start to stabilize, then I'll be looking to sort of grow that position and sell it out at a higher price target someday, which I've not yet set. I'm thinking about $60, but I think that will sort of evolve over time. And for now, I'm happy dip buying because I think the risk to reward ratio for my tolerance level is there. So this was my previous plan that we talked about in the last video. That gap fill to bring it up to 58 at that point, up to 38 at that point is what we were looking for, and that's this gap here. As you see, we just kind of like nudged ourselves up there a couple of days ago, and then got ourselves up there at open today. Right, I'm making this video on Friday, the 30th of April. So, we've basically filled most of that gap, if not completed it. So that was cool. And then, it hasn't had much momentum to bring it up toward the $51 range yet. So I think we'll sort of save that one for the future. And yeah, that was the old plan. So we're going to knock that out of here and go to the new plan, which I've placed over here so we can move it over so we can see it a little bit easier. But basically, what I'm looking to do at this point is dip buy on the shares side of things from 33.50 down to 32, and that's basically because you see this gap here encompasses that range, and then sort of see what's happening. I would expect it to bounce right around this level here, this to not spend too much time at $31, for example. So you never know when it starts to come down to fill a gap how far the momentum is going to drag it down, but this is a good bounce zone right here. Stop loss at 27 for that reason. That bounce zone should be significantly higher than that, should give you ample space to let it come underneath and build itself back up without hitting a 27 stop loss. And then on the upper price targets, I'll look for 42, which is basically coming up to fill this gap here, and then 48, which is essentially accounting for like this previous support and resistance levels here. Some supports, some resistance, some support, some resistance, some support. So a lot of good activity right around that, and I would clip it at 48 just because it's shy, it very well could come up to this 49 or even more, but I'd clip it at 48 just to be able to lock in my profit and not sort of catch it on a downswing, but try to catch it on an upswing still. The MAs, just to give you a view, they're coiling up right now, which historically, when they tend to tangle, they will uncoil in either a bullish or bearish pattern, and that will signify the next big move up or down. So I'll keep an eye on that for my options trading. Basically, like, I'll throw this back up here. So basically, when these could continue to tangle, basically sideways, or it could move a direction and still kind of be tangled, but you see it's tangled here, and then when it unraveled, it was a sharp move downward. So that is how I will take my indication on grabbing a call or a put to play it accordingly. The MACD is also curling down a bit. It's flattening out now. When I wrote this plan out, it was curling down a bit, but right now that curl has started to flatten a little bit, but you do still see the histogram on the bullish side is losing some strength there. So interesting that it didn't turn red from all of this selling off today, because that first hour was so crazy today on the push upward. So that's my plan for the shares and for the options on Mara. But for in my opinion, and in my experience recently, there have been few stocks that have been, even a rival to how profitable and how fruitful Mara options trading could be. But just remember, that also means that it's one of the more dangerous ones out there. So you really, really need to do your homework, know what you're doing with your options trading if you're going to engage in it, because you can absolutely easily take your account to zero, and you don't want to do that. Okay, PSA over. My old AMD plan that I had in the last video, I had a small profit or a small loss at that point, and was looking to add to my position, add a dip to 77, 76, and even 75. We didn't get that dip. I think that was, I don't know exactly when that was, but we never got down to 77. It wasn't at this point. It was after that. So it never got back down to 77. So I didn't get a dip, and then it had this huge run up to almost 90, and now it's come back down, almost down to 80. So coming back down for a dip. And yeah, I mentioned the RSI there, so we'll talk about that in my updated plan as well. So here's my new plan here, is basically start averaging down at 78. So I'm gonna bump it up a little bit, and that's basically because there's all of this resistance and support here around the $78 mark. And so I think that would be a fair spot, because it may bounce there, but it might come down to test it. Now that I'm looking at it, I might even start going in at 79. Yeah, I would say probably start going in at 79, to be honest. I can update this in case folks are screenshotting or something. And then I would feel comfortable buying it down all the way to 75 to continue averaging down. And that's on my longer term AMD shares position. And the way that I do those dips is I would start with a small dip buy, depending on how much total money I wanted to put into building my AMD position at that moment. I would start with a fraction of it at 79. Then as it dips down toward, say, 78, I would do a little bit more than that 79 fraction. And then at 77, I'd do a little bit more than the 78 fraction, so on and so forth, so that my biggest buy, if it dips down there, is at 75, if that makes sense. So on the options side, I've always had really good luck options trading AMD, knock on wood, and I usually employ a pretty simple strategy. AMD has a really strong history of dipping down to oversold territory, so about 30 on the RSI, as you see right here, and then running itself up into overbought territory, like you see here. So you could have ridden the price from here at about 79 up to about, say, 83, which is a really good options swing over the course of just a couple of days, and made a really good profit. And that would be just by noting the RSI oversold and overbought. So it's coming down into oversold territory again as we speak. So I'm going to be on the lookout, eyes ablazing, to catch a call on the oversold territory, and then sell out as it gets overbought. And then if I'm really feeling it, just flip it and sell it out, sell my call when it's overbought, and then buy a put when at the same time, and ride the put down to oversold territory. So it's just, I mean, you can scroll back through on AMD, you should do that, to see how often it just rolls from overbought to oversold and oversold to overbought. I don't currently have a stop loss in mind for my longer position. I don't feel that it's in great jeopardy. I do have an idea on the upper price target of 110 is right now what I'm looking at. So I'd really look to like trim as we work ourselves toward 110. So probably around the $100 mark, probably something like I would trim at 100, 105, 110, something like that. Close my position out at 110 and sort of like reevaluate, see what's going to happen. But it's a little bit hard to predict that right now, being that the idea that I would absolutely sell out at 110 or finish selling out kind of depends what happens on the way there. But the MACD, I can pull that up for a sec. It's flattening out here. As you see, the histograms really flattening out. And this is additional fodder for the RSI kind of proclamation that I just made, that it's getting into really good call buy territory, in my opinion, because this is flattening out and it's in negative position here. The MACD is in negative territory, and so when it crosses over, it has a lot of room to run. So it has a lot of room to run on the RSI and on the MACD. So those are really, really good signs. And the MAs, I would take a look at here. They're looking for this like bearish crossover as the 12 would cross underneath the 180, starting to signal potentially like a longer term downtrend. But like longer term, it's just on the hour chart, so it's not, we're not talking about months or even weeks. We're talking about days. So there could be a further dip inbound here, as the MAs would tell you. But to be honest, on AMD, I would much more heavily weight the RSI over the MAs, and then I would go MACD over the MAs as well. So my checklist would essentially go RSI top of the list, MACD like sort of secondary confirmation, and then I would only flip on the MAs if I was kind of confused and I wasn't quite sure how to read the RSI and the MACD, and I'd use that to maybe try to clarify. But for now, I would be happy with how the RSI and the MACD are looking, to say there's going to be a big bullish push coming up here pretty soon. All right, Microvision. I did not have a plan on this before, but it's been a lot of chatter about it, so I took a look. Some pretty interesting things to note. If I do end up taking a position, it looks to me like there's a floor at about 1275 or so. You see this candle, this wick here, dip down to that area, which represents all of this previous support, which represents all of this previous resistance and this previous support. So it's a really, really solid zone. So what I would maybe look to do is set like a limit buy around that area. I probably wouldn't set it down to 1275 because I would assume a strong bounce upward at 1275. So I'd put it maybe at 13, something like that, and like start a good position there. If I did do that, the reason I'd potentially dip buy down to 1140 is because there's all of this previous support and resistance here. So see all this resistance here, and then it flipped, and that's where it launched its big push, was off of that support level there. So I'd look for that, and then keep a relatively tight stop loss at 10, just knowing that if it fell below this previous low at 10.08, it's potentially not going to be a pretty sight. But that way, I don't risk too much. I risk about, say, $2 to $3 a share. And that's not bad. I guess it's a high percentage for how low the price is, but sort of like as a pure value proposition, it's not that bad. The MACD is looking, I was surprised to see this actually, but it has taken this bullish cross and it's in very negative territory. So it could be a really good sign for a push. I mean, these recent big pushes actually came when the MACD was more in positive territory or completely in positive territory, and so the fact that it has all of this sort of like potential momentum to grow into is, you know, really kind of inviting. And then the RSI, you know, really low, as you would imagine. Not 100% sure that the RSI is a big factor in this, but it's hard to tell because this run-up was so unique from all of this sort of like just fumbling, you know, for several days that previously happened. You know, there was big runs before, but it's kind of hard to tell when it has these like lengthy cooling off periods. So I'm not taking much stock in the RSI right now. The MAs are curling down, or sorry, have come down into this like sort of threatening a bearish formation. But you see the 12 here just started to curl up, like it may take another run and have a bullish crossover. So I mean, if there's a bullish crossover in the MA and the MACD, like that could be pretty compelling in my opinion. All right, well, if you folks are in any of these plays or if you take positions in any of them this coming week, I wish you luck. I hope that some of these ideas were helpful, and thanks for watching, thanks for sharing, and I hope you have a good week ahead. I will see you in the next video.